Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending May 18th, 2018. We're halfway through May. Remember, May, June, July, August traditionally is the sell in May and go away seasonality period where the S&P 500 tends to underperform. Now, in 2017, that was not the case. We moved up quite nicely over the summer months. Kicking it off this summer, well, who knows? At least it shows right now we're in a very little bit of a chop mode. What I've got on the screen here is the S&P 500 E-mini futures. You can see this symmetrical triangle here that we broke out to the upside, which was the expected break. But we're up into an area here, which is where I see a lot of resistance. You can see on my screen here, I've got what I call my R1 zone right up in here. I've been, as I tell my members, this R1 zone, we've been stuck in it really, quite frankly, for a week. Okay, so I've got this R1 zone right here, and you could see this volume over price right here, and then there's another larger layer of volume down here in what I'm calling my S1 zone. So that would be the area of support. You can also see sandwiched in the middle here is the open price of the S&P 500 for the year at 2675.25. So we're pulling back here. We've had a little bit of a pullback in the MACD. I could probably draw that pattern as a bull flag with that big move up higher like that. The odds favor a break to the upside, and you'll know in a minute why I think that is what may happen near term. Although I don't think we've got enough energy to get up to this level up here, which would challenge these prior pivot point highs. Remember, this pivot point high we took out when we moved up in this area right here. Okay, so we've taken out, having taken out this pivot point high, now we're going to be working on these right here, but there's still a lot of overhead pressure. We're sitting here in this, what I call this consolidation zone point here. Now, we could break down to the downside. Just because we got this bull flag does not mean anything more than the odds favor an upside breakout. And I'll show you a couple of other indexes that would seem to suggest that's what we're going to get. But for now, you can see down below this red line, which has got a slightly downward vector along with a slight upward vector on the 200 EMA. So this would be the 200 EMA right here, and this would be the 50 EMA right here. So you can see that once we broke out of this downsloping top part of this symmetrical triangle, we moved up into this area here, and now we're sitting in this R1 zone. All right, it's going to take enough energy to escape that level because you can see right up there, we just could not get up out of this area, couldn't get out of the way, which caused the MACD to move lower. Now, we've also got lower volume, trading volume this week as well. As we go into the summer months, this is going to be quite common. I think this summer, rather than last summer of moving higher, we're going to have bouts, fits and starts where we move up and then we consolidate, probably give it all back up, move down a little bit, consolidate. So it's going to be a little bit more choppy with bouts of volatility, whereas last year we didn't even know what volatility was. Okay, so this is kind of where we're sitting right now on the E-mini S&P 500 futures. As I mentioned before, with volume, you could see the volume numbers here. As the markets have moved higher off of this low way down here like that, you can see right in that area there, that's clearly a down move in volume as price has moved up. All right, now this little purple line there is a 5 EMA of my volume, and the blue line is a 20 EMA of volume. And typically when the 5 EMA is over the 20 EMA, then we've got a little bit of a bullish segment to it in volume, or more volume coming in. Not necessarily bullish price action, but bullish volume. And you can see here, ever since we hit this peak low here, even with this up move here, down move and up move, right, where we made a low and a higher low, we've actually made a high and a higher high. Starting at this point right here was kind of a peak in volume, and then the 5 EMA has been below the 20 EMA as we've come down, and then we just finished today with kind of a nothing kind of day. It's just really Very, very low volume. Traditional volume here is like a volume day of a holiday, half trading day kind of thing. All right, so any pullback here on a very low volume event, I don't really pay too much attention to, but I do pay attention to this whole low volume aspect of making higher highs and higher lows here. So that puts a lot of this into suspect. I think we've got some more oomph here, as I mentioned earlier. Let me explain why I'm saying that. Now, that could all come out of the markets very quickly, but let me explain why I'm saying that. So you can see for the year, if we just come back here, you can see we're in the green for the year for the E-minis. Now let's go look at the Russell. That is the chart that shows the strongest action for the year. So if we go look at the Russell, you'll see here we've actually been making new all-time highs. In fact, over the past 3 days, we've made new all-time highs, not just 2018 highs, but all-time highs in the Russell. In fact, today, Friday, the Russell futures finished up in the green just a little bit, but we made new all-time highs, 1632.50. Now, the Russell is a small cap index, and this thing here, I've got a projection for the Russell to the upside of around 1661, roughly. This colored bar is a combination of Gann and Fibonacci, and it is suggesting that we've still got some more upside room. You can see I've got a 3, 4, 5 Elliott wave pattern, and for those of you that are familiar with Elliott wave patterns, you know that 5 completes a trend, and then we go into an ABC pattern, which means typically, when you get one of these kind of patterns, you'll get this 3-leg, 4-leg, 5-leg, somewhere finishing here, then you get an A leg here, then you get a B leg here, and then you get a C leg here. And the location of the pivot points of that A leg, B leg, and C leg, that's going to determine whether after this ABC corrective pattern, after hitting an Elliott wave 5, we move lower or we move higher. And that's just, getting a bit ahead of ourselves. So what I'm suggesting now near term is with the Russell making new all-time highs. The Russell is small cap and mid cap. Small cap primarily, with some mid cap thrown in here too. Corporation valuation size. And generally when small cap is leading the way, the small cap generally leads the way and leads all indexes up, and it leads all indexes down on the belief that small cap is higher risk on types of trades. So when the markets are in a bullish frame of mind, and you generally see these small cap moving much stronger than mid cap or large cap stocks. And then vice versa, when the markets are moving lower, getting ready to move lower, the small cap's the first to give it up because people want to take risk off the table, and they'll put it into value stocks or things that are less risky compared to the Russell. So we're getting all-time highs here, all-time now for the week. Okay, you can see we're well into the green for the year. You can see this upsloping trend line. So we've got some elevation there. You can see both an upsloping 200 EMA and a 50 EMA. Everything is bullish on this chart. Now, if we go look at the Dow Futures, you're going to say, gee, is this on the same planet? If we look at the Dow Futures, you can see here, we're just sitting right at the open price for the year, almost slightly in the red. The Dow Futures opened at 24,735, and right now the Dow Futures sitting at 24,726. So we're actually red year to date for the Dow. And look at the all-time highs for the Dow, which were made back in late January. You can see here we're well off the all-time highs here. So we've got a huge disparity between the Dow performance and the Russell performance. And when you've got that kind of disparity, one thing to think about is a pair trade where you sell the Russell and you go long the Dow. We'll be looking at that for our members. But beside that, when you get the Russell leading the way to such a degree over the Dow, that suggests that there's still money willing to seek risk. Now, part of the reason why, as I said in my narrative in front of the blog here, was that you've got a stronger dollar, so that supports a stronger Russell, and you've got these potential trade tariffs looming over the markets. Trade tariffs tend to affect mid cap and large cap to a greater degree in the US than small cap, because small cap is the belief that more of the earnings from small cap profits and losses, top line, bottom line, are derived from US shores, within US shores versus international trade. So that is another reason why we're getting some of this disparity. But very rarely do you see this late in the year when you got such a wide differential between the Russell and the Dow. Okay. Now, if we look at the Nasdaq, it is also in the green for the year. I mean, the Nasdaq is nowhere near priced like the Russell. It's off of the highs for the year, but the Nasdaq is well off the 2018 open price. You can see the 50 EMA has got a slight downward cant to it, a vector. The 200 EMA is slightly pointed upwards, but the Russell, I mean the Nasdaq now, unlike the other indexes, it made a second all-time high in March. If we look at the E-minis, you can see here in the March big up move, right in this area right here. The E-minis could not come up and make new all-time highs right in this area here, March 10, 11, and 12, right? You can see how far off of the 2018 highs. But if we look at the NASDAQ and look at the NASDAQ relative performance during that same time frame, right? Here's January, all-time highs, and we come down, and then February, same time, it took out the prior pivot highs. Again, bullish for the market. So we've still got a NASDAQ that looks like it wants to play bullish, a little bit of a consolidation pattern here, okay, but it still wants to play bullish. We've got a Russell that clearly wants to play bullish because it made three all-time highs on Wednesday, all-time high on Wednesday, all-time high on Thursday, and the same on Friday. So you've got all of that, and then you've got the E-minis, which are, you know, finished flat today, but still a little bit above the open price. And then you got the worst performer of all of them, the Russell futures. I mean, the Dow futures. And you can see we're sitting here. And if we look at the Dow index of the Dow, it is, as you can see here, well below the 2018. Well, not well below, but it's you know, below by almost 80 or 90 Dow points in the red for the year. Okay. And we've got a closing of the 50 EMA and the 200 EMA on this thing. So it just suggests that one of these is going to play catch up. All right, either the Dow is going to get stronger, we're going to see the Russell, because it's a small cap, lift all other markets, or the Russell is going to be just overextended and it's going to give itself up. And then on a relative basis, the Russell on a percentage basis will fall greater than the Dow, the E-minis, and the NASDAQ. So that's kind of what I'm going to be watching over the coming weeks, because keep in mind, in about 3 weeks, we got the FOMC meeting in June, and there's about a 94-95% probability of a rate hike. That's already factored into the markets, guys. It's already factored in. The markets are already pricing over an 80% chance we're going to get a rate hike in September, but the big one is around a 50-50 chance on whether we have a rate hike in December. That would give us our 4th rate hike for the year. If the markets feel that's going to happen, we'll see a little bit more of a sell-off here to kind of recalibrate forward earnings, forward PE ratios. Interest rates will move a little bit higher. So that's kind of where we're sitting across all these indexes, guys. If we look at the Dow Jones Transports, okay. Well, let me find it. It would help if I got the right one on, wouldn't it? If we look at the Dow Jones Transports, now it is in the green for the year, but just barely. I want to see the Dow Jones Transport. Sometimes it leads the Dow. You can see how it's been bouncing off the 200 EMA. We do have an upward vector on the 50 and the 200 EMA on the Dow Transports. So I still believe the market still want to go higher. There is overhang. The overhang that I keep telling our members is only based on 2 things right now. One is interest rates. Where are they going to go? We're going to have 2 more rate hikes this year, or we're going to have 3. If it looks like we're going to have 3, we'll see a little bit of pullback in the price action, because now equity is going to be competing with debt for money. And then the second big overhang are the tariffs. If we get the tariffs off the table, we get the interest rates. I think we can handle higher interest rates slowly but surely if we get the tariff issue off the table. Okay. So that's kind of where we're sitting right now. And when I hear people talk about inflation, all they're really talking about is a cause and effect. We're getting commodities moving higher, but we're getting the dollar moving higher. And inflation, yeah, we're seeing more inflation, but that's going to be driven by the interest rates. So higher inflation generally begets higher interest rates. So that's why I'm not really talking as much about inflation as I am interest rates. Okay. Now, if we also look at the um, let's come over here and look at volatility here for a second, and we'll look at the VIX. I mean, it finished the week right around 1342. So we're on the upper band of the green, but this suggests that the market is kind of in a doldrum period right now, right? Keep in mind we're in the upper band of the green, but we're still in the green. So it took us about 90 days to move out of the yellow, which is kind of what I was saying or suggesting it's going to take. But we're more sensitive to downward movement in the equity market with a spike in volatility just because of the way vol has been moving lately, especially in the early part of this year in Q1. So we're still at a level here where volatility is, I think, a little bit lower than it should be given the inherent geopolitical risks that we have out there. So be very careful. Um, it's a little bit lower than I think it should. Probably should be sitting in the yellow here around 14 or 15. Um, and if we come over here and let's look at the Treasury market, and we'll look at bonds. Bonds are up. So today we're right in my area here. Let me just get it down here. Right in the area where, in fact, we're slightly below where I said bonds would move to. I said bonds would move to about 140 and 27 ticks. We actually went down to 140 and 5 ticks. So we're going to hover around this area for a little bit. It's a strong consolidation point. Now, I had this on my chart back in January, February timeframe. So this is not something I just put on here. And this is where I said we're going to run into kind of a sticky wicket. And we can kind of stay here for a bit. Now, my chart does suggest we can go lower, but I think we got to work through this 3, 4, 5 Elliott wave pattern here, okay, which means we're going to have a little bit of an ABC chop pattern, and then we're going to kind of figure it out from there, okay. And if we look at the interest rates, the 10-year interest rates, you'll see they came off about 4 basis points. We actually moved up just like this. So the 10-year actually went up to 3.115. And a lot of the big money is saying if we move up to about 3.25, that is going to be the limit before it starts to affect the market. So we're seeing, you can see here in the 50 EMA and the 200 EMA, both upward vectors on both. That does suggest we do have a 3, 4, 5 pattern here. So that suggests we're going to get some chop now with some possible downside action, but not a lot. I would take any downside action in interest rates as a sign to go short bonds because I think interest rates will pop back up and bonds will go back down again. Okay. So that's a little bit about where we're looking at here on the interest rates. If we look at currencies and we come over to the dollar is just doing kind of what I said it was going to do, guys. This was this long consolidation period. The dollar continues to make new 2018 highs. Let's just get it on here like this. You can see here this long pattern consolidated, and then when it broke out of this area here, I said that would be a trigger to go long, and that's kind of what it's done. Okay, and we're sitting here, we're coming up on another key pivot point. You can see right in this area here. In fact, I'll mark both of them on the screen right here. There's one at 94 and another one roughly at 95. And I think we're going to run into a little bit of a kind of a consolidation pullback mode because that's a long Elliott wave 3. Normally, when you get an Elliott wave 3 like this, you typically get a strong upward thrust with a 3 leg. Then you have a little bit of a profit-taking consolidation pattern, and then you continue on the journey with a 5 leg like that, okay? We have not had this pullback yet, right, in this area here. So I do believe we could get it. Now, notice how this is setting up as we come into a Fed meeting in 3 weeks. That is definitely going to affect all of these currencies, every single one of them. So it's going to be real interesting. And typically, if the Feds come out, remember the Feds, I'm banking on the Feds right now doing what they've done for the past decade. And same thing with Super Mario and the ECB. I'm banking on them both to be very dovish. All right. And because the dollar's had this good run, I would expect the dollar to have a nice little pullback here, giving us a consolidation point like that. Okay. that would be what I would consider to be. And then at that point right in here is where I would be more interested in looking for a trigger to go back long again in the dollar, or short again in the euro. Okay. And speaking of the euro is right here. You can see here where we just continue to make new lows in 2018 on the euro. Now, I know they love it over in Europe because that means their exports are going to be cheaper here in US dollars. And we're at a major support point right here. You can see this big volume over price. The next one is down around 116 and some change. I said I don't think we would get below this area here, this blue shaded zone, which is our S1 in price right here. That's kind of where I think it'll kind of hold up a bit. All right, but that's kind of where we're sitting with the currencies. And then of course the British pound. It looks like it's trying to break this area here. But remember, it's been in this channel here since the Brexit vote, since we've been moving higher. As long as we stay in this channel and start to move up, I would be more bullish than bearish. But it looks like it may want to break and come down to the 132 area. So I'm going to watch the pound very closely. Every time we've been north of the channel, it's pulling back. Every time we've been at the bottom of the channel, which has not been that many times since December of 2016, we've had an up move here. So we're going to watch this very closely for a possible play. If we come over and look at gold, gold had a break. It broke to the downside. Okay. You can see on this daily chart this break of the wide support zone right here, right? That's the daily chart. We broke it now. I'd expect a little bit of a retest, come a little bit higher, sit here for a little bit, and then roll back over again. That would not surprise me. And that rollover is where I would be more interested in going short. I would not chase it down at this level down here. In fact, we made this low right here, sitting at 1284. So a little bit of a move higher, giving us a little bit of a profit taking mode from the bears that were in this trade. And then once that is done, I think it'll roll over again. Because remember, higher interest rates, stronger dollar is generally bearish for gold. All right. Same thing for silver. It's bearish for silver as well. And although silver is holding up better than gold, either one of them, I would not want to be long in these guys right now going into the FOMC meeting. And then, of course, if we come to our old favorite oil, we got some trades on in oil. We're making money in it. You can see right here, oil is just off its 2018 high of 72.30. In fact, oil closed at 71.38. It's almost a dollar or so, 90 cents or so lower than the highs for the year. Got a little bit of a divergence set up here, so that suggests just a little bit of a pullback, maybe into the 68, 67 area. But remember, you got the geopolitical risk out there, but we're hitting my resistance area just perfectly right up here. Again, this colored bars are representation of both Gann and Fibonacci, and rather than cluttering up my chart, I use the system software to generate the resistance level for me. So it does a nice job of putting them all together into a colored bar, and that's kind of where I'm sitting right here right now in the oil markets. If we look at gasoline futures, well, as you can see here, let me just move this up here. Gasoline futures is doing the same thing. All right. And this one is going to have a little bit of a pullback. We're going to have higher prices at the pump for gas. You can see this 3, 4, 5 leg. It's a really extended 5 leg. When you get something like this generally means that, you know, the Elliott wave count is either A, not right, or B, if it is, then you get a very short and shallow chop up in this area. If I move it out to a weekly chart, looking at gasoline futures, you can see here, again, that's really not a 3 leg to me to the upside. But the software attempts to label these, all right? But you can see here this big move higher like this, and we're coming up, we're just past this key pivot point right here. So I would look for a retest of the 218.57, possibly moving just a little bit lower, and then we're going to go into a chop mode right here. Okay, so that would kind of be what I'm looking at in the energy market. In the ag market, wheat, corn, soybeans, well, we've been trading corn. Really just a wild ass ride. I don't know what to tell you. It's just been really interesting. Now, what I said that what could be the typical pattern here is something like this. Um, if we look at it, you got this down move here. We come up like this, come down, and then it gives us a little bit of a cup and saucer pattern. We break out, and the upside breakout is about 10% from here, which should, put us up right around this area right here, kind of about where we are, right? We hit 2018 high price right here, and now we're just sitting at this support level here. All right, so it's going to be real interesting to see how this thing shakes itself out. But I do believe longer term, we're probably going to move up higher. Short term, they're kind of finishing up their planting season. What was their acreage planted, that kind of thing, to get an idea of how much is going to be coming out of the crop. So it's a little bit jumbled, but you can see here, if I were to take it down to a daily chart, you can see here where it's come down and it's just resting on the support area of 395. So we're kind of between the 408 and 395 area right now. So I think we'll sit here for a bit until we get a little bit more detail on the crop report and just kind of the planning in the season and as it goes. All right, everybody, that's kind of where we're sitting right now in the markets. For our members, I will see you this Sunday night for our weekly market watch. If you're a non-member, highly encourage you to come in. We're running Option Masters, which is really great. I think you guys will just love that. We go into everything on the trading and options. And if you're also as a annual member of our group, that would get you into all the stuff that we do. We got a fairly wide international audience because we do a lot in the commodity world as well as the indexes. So hopefully I'll see you in there. But anyway, for the members, I'll see you guys this Sunday evening at 8 p.m. New York City time for just get a look at what's coming up for the following week. All right, everybody, have a great weekend. Members, I'll see you Sunday night. Bye now.